Hello, good evening. It's Adil Fazal bringing you a review of the US markets from an intermarket analysis perspective. As always, be sure to visit cfds.com. This video is brought to you by them, and certainly be sure to visit the website www.cfds.com for your trading needs. Alternatively, there is the educational website as well, where the charts and analysis are posted daily. Okay, let's kickstart in terms of the US markets now. The actual market's quite substantially higher, given the fact that Asian markets were certainly weaker overnight. So let's try and give you the narrative before we obviously start to commence in order to dissect this market. Now, the Asian markets overnight, first of all, you had the Nikkei weaker, the Hang Seng, and the Shanghai down almost 1%. So certainly a risk-off zone overnight. Okay, now in terms of the market news and market moving news itself, from the European market perspective, there was the construction output that came in month on month worse than expected. The ZEW survey expectation in CHF in Switzerland certainly came out weaker. We had multiple members, Fed, Lockhart, Mester, William, all hawkish. Housing stats came out weaker, so that wasn't exactly a good sign, although building permits came out in line. Okay, and then we had the minutes, FOMC, where everybody expected them to be hawkish, and the markets, they were certainly hawkish, given the fact that they did indicate, obviously, with regards to the market itself in terms of the actual interest rate rise. But having said that, basically, the markets certainly have it, obviously, pricing all the bullish rhetoric so far, and to a large extent have already factored in a rate rise. Now, you can certainly see that by the dollar reaction. You can see that even with the three Fed speakers, Mester, Dudley, let me just confirm, and Lockhart, we had Mr. Kaplan as well. Mr. Kaplan, who said, don't wait for wage pressure. Basically, you want to think forwardly. So we had can handle a rate rise from Mr. Mester, ready to support hike in September. So basically that was from Mr. Lockhart. So basically we have a hawkish tone. The rhetoric remains certainly for a rate rise in December, and whether it's one and done. And given the fact that the price action obviously has reacted negatively thus far, it basically means that the market has already priced in a rate cut, given the fact that we've had this thrust in the dollar at one and done. Okay, so basically the market is expecting this one rate cut, and after that basically the Fed will certainly back off. Okay, looking at a 4-hour chart on the dollar index, again you can see that we held this gap fill level here before the market retraced and pushed lower. 60-minute chart, again you can see that we are seeing weakness on the actual dollar index itself. You can see here we close that gap, as you can see. Even with, I mean, ask yourself this, folks, you had 3 or 4 Fed members all hawkish, you had the minutes come out hawkish, and yet the dollar fails to push higher. That isn't a good sign. Okay, it generally means that a top is in the dollar index, and if the top isn't in the dollar index, then you are looking at a potential a rally in commodities as well. Now, if I bring up the commodity sector here, first of all, the energy sector, you can see here we've had a bounce. Now if I just bring up this is the XLE, so we are certainly seeing a higher low. Okay, although we do have an unfilled gap below, that certainly is a concern. Now bring up the metal ETF, you can see here that we've held a double bottom, and we are looking to potentially close the gap above. Now, especially with the dollar index obviously now into potential resistance, that will certainly be the case. But for now, we are looking for a potential pullback and small sell-off going into to potentially tomorrow's session, given the fact that US markets are now extended. Okay, so bring up the actual Shanghai index first of all. You can see here we are into that fib 75%, and we are holding and certainly obviously experiencing weakness. The Nikkei as well certainly experiencing weakness, failing to close that gap above. Okay, the dollar index, which I've already showed you. Now I need to show you the actual Green Haven. Again, this commodity index still remains weak to a large extent, but having said that, we had crude potentially make a double bottom intraday. If I just bring up a 10-minute chart of the price of oil, and I should be able to show you. Okay, so this is the crude futures. Okay, so potentially you can see that we had a pivot low, and then obviously quite a substantial rally. So 60 minutes double bottom, you can see at $40, and we had quite a substantial rally on the price of crude. Okay, in terms of the copper as well, And also gold, you can see we're putting in a bottoming tail, so again the dollar will certainly help. Crude oil, obviously I've already showed you. The chart of copper, this is an interesting one now. Even with the weakness in the dollar itself, we're still struggling to really make a bounce here, but the 60-minute chart certainly is building a base. Okay, so again we're going to watch this very closely. If we can start to get a thrust higher here, it should certainly help the Aussie and the Kiwi. Now the Aussie and Kiwi certainly did get a bounce late into the afternoon. I did take a long on those positions, but I think I closed out very quickly, okay, and prematurely. So again, that certainly is something that we're going to observe. Okay, now again, given the fact that the Fed is obviously due to go ahead with potential hikes, etc., this is relatively bearish for US indices. Okay, and given the fact that the dollar failed to certainly rally with the market. In terms of the expectations of a rate hike, etc., etc., this doesn't bode well going forward. Okay, so from my perspective, you are looking at weakness in the US indices, okay, and you are looking at weakness in European indices as well, because you are going to see the dollar start to fall. That will obviously help the commodity sector, so the FTSE 100 will certainly benefit, or at the expense, or the S&P may well benefit as well to a large extent, given the fact that it's commodity related. But the Nasdaq and other indices will certainly start to feel the pain. Mainly the S&P as well, because obviously rate hike in the US is certainly considered to be negative to a large extent. Okay, so that will certainly have a negative impact there. But again, the commodity side of the equation will certainly catch a lift, and you are going to see strength in the FTSE 100. From my perspective, the FTSE 100 certainly remains a stellar index out of all of the indices. Now the S&P certainly is heavily weighted towards commodities as well, so that could certainly catch a lift. But the actual bearish impact of a rate hike will certainly weigh on the indices as well. So that's something to certainly discuss. So it's quite a conundrum at present, given the divergence in central banks and the divergence in certain indices as well. Okay, now looking at the S&P first of all to try to understand exactly what's happening here. Let's start by taking the weekly chart. The weekly chart of the S&P 500 is an inside bar, so therefore one would consider that to be bearish, so bear that in mind. Okay, and certainly is a bearish setup from a long-term perspective, especially those that are swing traders. They certainly must be getting hurt, given the fact that that candle certainly has been negated to a large extent. The daily chart itself, as you can see here, we broke out the 200 MA. One hell of a thrust today, impressive. I did expect that 200 MA to hold. There was a gap here as well that I expected to hold. This market certainly is very, very impressive and burst right through it, even with a rate hike as well on the horizon. So very, very impressive. Again, now looking at the fib retracement, take the pivot high, take the pivot low. We have retraced 61 to 75% resistance. Hence the reason why I say we are expecting some weakness on the S&P 500, and I certainly am short at this current juncture. We even took out gap fill on a 60-minute chart. Very, very impressive. Okay, very, very impressive thrust, even with the rate hike concerns as well. Very, very impressive. Okay, even with Fed, Dudley, Lockhart and Kaplan, all hawkish, still very, very impressive. Okay, the resistance remains at 2087 on the S&P 500. Obviously, we've taken out substantial resistance zones already. Now, there is a gap as well above, so again, I'll explain that on the 10-minute chart more better. Okay, so looking at any levels of resistance, you do have previous resistance equal support here. So key level 2087, solid resistance zone, and I don't expect that to be taken out anytime soon. Okay, the 10-minute chart on the S&P 500, let's just observe this. Like I said, that gap was taken out just like a knife through butter. A very, very impressive move. Okay, now again, that 2087 level comes back into play again. You do have a resistance zone here at 2082. So 2082 to 2086.87 is your level to watch out for. If that fails, obviously we start to push higher overnight, some substantial move in the Asian markets, and you are looking at gap fill above at 2100, and the next level then is 2103, and then you have 2108. But again, my analysis states we are going to pause here now, okay, and look for weakness in the next 24 hours. Now bear in mind, you do have an unfilled gap below, so again, those traders that are playing the gaps, again, you have this unfilled gap at 2050 that needs to close, and you can see that this move is quite substantial thus far. Certainly will start to run out of steam. Okay, so 10-minute chart certainly is into resistance on the S&P. Now let's cross-verify that with the Russell 2000. Let's bring up the chart on the Russell now. Daily chart, the Russell, there is an unfilled gap here on the Russell that certainly needs to close. So again, one needs to be aware and cautious of that, okay, in terms of trading. Let's go to the 60-minute chart to see if we can get more clarity here. Okay, so even with the death cross with the 50 MAs going down, momentum obviously bearish. Still, this Russell certainly pushes higher, but we are into resistance. But again, be mindful of that gap that needs to close above. Any thrust higher from this 116.5 to 117 level certainly will be met with face resistance, and I don't expect that to be breaking down anytime soon. Okay, so certainly looking for weakness there. We did have this diagonal trend line support, which obviously we failed to hold and we negated. And again, it's all about that gap above. Okay, the 10-minute chart itself, you can see quite an impressive buying spree towards the close. And again, all eyes on this gap above. And we are almost there to close that gap. So therefore, that's why I've taken my short positions on the European stocks, given the terrorism phase, etc. So it's very impressive, folks. I mean, if you think about it, I mean, we have had terrorism concerns in France, and that's been negated. We had renewed terrorism concerns overnight with Hanover, and obviously in North Paris, shooting, etc. And yet still this market moves higher. Very, very impressive. I mean, weaker, we had Royal Mail down, we had BOE, Broadbent in the UK, certainly hawkish. Housing stats weaker. I mean, everything was indicating down, and yet this market defies gravity and defies everybody's expectations and forces short squeezes higher. I mean, there must be too many shorts in this market. That's the only thing I can think of at present, and this market certainly is moving higher with ferocity and velocity. Okay, so basically that's the level that we are going to watch. Any that level will certainly signal a potential sell-off in the US markets. Now let's look at the actual Dow itself, Dow Jones. Again, looking at the daily chart of the Dow itself, again, you've had quite an impressive thrust higher on the Dow ever since we broke out this rising contracting wedge pattern. Looking at your Fibonacci retracement, taking the fib high to the fib low, we are into the fib 64 and 75% resistance. Again, according to Mr. Bulowski, his website, 75% is the key level. If the markets don't turn there, then you are looking at potential full-on reversal. So again, this is something that we are going to observe. So looking for resistance on the Dow itself. Again, looking at the 60-minute chart of the Dow, we did close this key a gap fill level. So therefore, that will obviously signify weakness going ahead. Okay, so looking at our diagonal trend lines, you do have a key diagonal trend line in play. Take the pivot high here, connect it to here. Again, bang, slam, bang into resistance. So therefore, looking at a risk-off scenario in the next 24 hours. Okay, hence the reason why I'm bearish, and I certainly will remain bearish and maintain my bearish stance, given the European markets obviously have concerns with regards to terrorism, etc. So geopolitical concerns always trump QE, so bear that in mind, regardless of Mr. Draghi's pledge of QE, etc., and expectations of him obviously enabling QE and so on and so forth. So again, watch out and be mindful. Okay, certainly be mindful of that going forward. So again, we are into resistance. We've closed the gap, and we are into diagonal trendline resistance on the Dow itself, and therefore I am expecting weakness. Okay, again, 10-minute chart, you have this gap fill, which obviously we are focused on. We have resistance just above, not too far off at 17,800. We have horizontal resistance here. Again, we are into that zone at 17,750. So looking for weakness going into tomorrow on the Dow Jones. Good. We can cross-verify that with the Dow Transports. The Dow Transports certainly weak, as you can see in the daily chart. We've closed that gap, so therefore you are looking at gap fill resistance, okay, and therefore you are looking at weakness going into tomorrow. The 60-minute chart of the Dow itself, again, nothing really of any importance. I mean, yes, we've had this impressive thrust higher, but it's all about that gap. Once we close that gap, then we are looking for weaker prices, and we are looking for the market certainly to go lower. Okay, so again, Dow Transport's confirming the weakness in the Dow. Okay, so everything so far is confirming a sell-off from my perspective. Wilshire 5000 with slam bang back into the 200 MA, and we are looking at resistance. Looking at the breakout of this rising contracting wedge, we're back into that 61% fib and 200 MA. 60-minute chart, again, we are into horizontal resistance on the Wilshire. And given the fact that we have hawkish rhetoric, and obviously the minutes have well confirmed that this rate hike is going to go ahead, then this does not bode well for the markets itself. Well, given the fact that the market itself has been focusing on a weaker euro, and that's really been the trade in all global markets, really the strength in European equities has been sending everything else higher. Given the fact that the dollar is now topped out, everything has been factored in terms of a rate rise. The euro will now start to rally, and that will obviously cause the markets to sell off. Okay, and that's my philosophy at present. And given the fact that you have terrorism concerns, etc., etc., you are going to see them dictate the sentiment now going forward in the next 2 days. Okay, so therefore a risk-off scenario. Again, the Wiltshire is coming into resistance. We're not very far off at all, and therefore you are looking at a risk-off scenario. Now, looking at the Nasdaq now, it's going to be, let's look at the biotechs first of all. Biotechs have broken out this key diagonal trend line, very impressive. Have to certainly respect that. But we are into horizontal resistance. That's the gap fill level that caused a sell-off on the Nasdaq initially, and that's exactly what we're expecting. Okay. Now, looking at the 60-minute chart, we can certainly zoom in here, give you a better perspective. Again, gap fill resistance on the biotech, so therefore we are expecting weakness on the Nasdaq. Hence the reason why I'm actually short the Nasdaq with subscribers on the live analysis service. It's been a tricky week thus far, up and down, can't really nail the market moves. These short squeezes continue. Okay, in terms of the semiconductors now, as always, semiconductors generally tend to lead, just like the Dow Transports lead the Dow Jones, and we are looking at gap fill resistance just above. So any additional weakness, I mean, the Nasdaq rallied on the base on the back of Apple today, but even that was quite more than stellar than I expected, and very, very impressive at that. Okay, so we have a 200 MA resistance, 3-bar move, so looking at a 4th bar reversal, general TA stuff, okay, or TA strategy, etc. And basically you are looking at a resistance zone here on the semiconductor 60-minute chart. Again, you do have this inverted head and shoulders brewing, so that certainly needs to be observed. Okay, so watch out for the inverted head and shoulders, quite a powerful pattern in technical analysis for those that are technically versed. Okay, so as you know, TA states higher low, and obviously you are looking at a potential reversal here. But having said that, again, like I said, it's all about hawkish rhetoric, and that certainly will, and given the fact that you have terror concerns, etc., that will certainly dictate sentiment going forward. So therefore you are looking at potential weakness on the semiconductors, and given the fact that you have lower lows and lower highs as far, you are looking at continued weakness going down. Okay, you have this diagonal trend line that needs to be observed, so watch out for that. Any further strength obviously slam into gap fill resistance, and therefore you are looking at further weakness. Okay, so the biotechs and the semicons certainly indicate weakness, so let's have a look at the Nasdaq and see what it has to say. Okay, so in terms of Nasdaq and price action and the actual movements here, you have had this gap that was obviously there, that was taken out as well. In terms of resistance, on the daily chart, nothing really as such. We can look at the 60-minute chart really for better guidance. Again, a horizontal resistance zone at 6439. I'm actually short from 6441 with a stop at 6471 if I can recollect correctly. Okay, so we have a thrust higher, which is very, very impressive, but bear in mind we do have an unfilled gap below, and therefore I am expecting weakness on this the actual market itself. Now, it has been a very impressive thrust higher given the fact that we've taken out that fib 75% resistance, but we are now looking at weakness. Now, we had this diagonal trend line of resistance as well. It certainly has taken that out, so very, very impressive. If the market continues and you do have a gap at 4706, resistance at 4680, sorry. 10-minute chart of the Nasdaq itself, you did put a potential topping tail, in the market before the close. So again, but having said that, bear this in mind, folks, you have an unfilled gap below, and that gap is based on terrorism concerns and hawkish rhetoric. So therefore, I would expect further weakness, okay, on the Nasdaq going into the next 24 hours, given the fact that Asian markets are certainly weaker. I think that's a wrap now in terms of the market itself. Again, it's all about the dollar index, and the dollar index really, given the fact that the markets have been rallying on a stronger dollar, and therefore you are looking at a sell-off on the markets on a weaker dollar. Okay, not only that, given the fact that everything is now revolving around the ECB and QE from there, it certainly is going to be the end of the merry-go-round, shall we speak, or musical chairs on the Euro USD as we start to appreciate, and European markets will now send us lower. Okay, I think that's a market wrap up on the US markets. Again, be sure to visit cfds.com for your trading needs. Goodbye.